Happy Monday, everybody. I hope you enjoyed your weekend. I think we were unsure last Monday if we could top the news over the last weekend, an attempted assassination of a presidential candidate. Well, as they say, don't tempt us. Here we have a president stepping out of the race for re-election. We are living in historic times. Today is July 22nd, 2024, and this is your Monday Market Update. I'll do a quick recap of last week's market action, and aside from the political situation, let's see what to expect. More Fed speak and more earnings? We're going to find out. Hold on, I'll get to that. Last week, on the heels of the assassination attempt on Trump, and this was and is certainly a big event, markets were not inclined to react to this too much. Two main reasons for that. Number one is after the debate, the markets were already assuming and pricing in a Trump victory in November and potentially a Republican sweep. And the events of Saturday did not change that. If anything, it made that argument stronger. And two, the ultimate direction of this market, as I have been saying, will be determined by the economic growth. If we get a slowdown or if we fall off the cliff in growth, the events of the weekend, again, don't change the growth prospects. So markets got back to business on Monday, opening higher and setting records. Assassination attempt was viewed to make Trump's chances of winning in November better, and in turn, a business-friendly environment. This drove markets. It certainly was not the eco data at home or away, because Chinese growth was disappointing and Empire manufacturing was still showing contraction. Add in a dose of middle-of-the-road earnings, and you have a market grinding higher, not on fundamentals, just going higher. New records for the S&P, and though things went into digestion mode later in the day, markets still finished with a quiet win. The Trump news stole the show, but growth will be back front and center. Markets ended up. Dow closed up 1/2%. S&P up 1/4%. The Nasdaq was also up about 1/2%. Tuesday saw markets open higher again. Same plot to the story, just different details. The retail sales report that we were looking for stayed strong and was better than expected. Excuse me. Not good enough to put rate cut expectations away, but good enough to quell some concerns about the consumer. If the Fed threads this needle, they will get a slowdown in the economy without consumers slowing down too much. This one may be too much to ask. A rotation has begun, whether it is the rotation that'll be written about or just another short-term move. We'll have to see, but the small caps have outperformed in the short term. Lower rates, Republican victory, and we saw more money move out of the Mag 7 into the other 493 stocks in the S&P, and also the small caps. The Russell 2000 was up 3.5%, while the Dow was up only 1.75%. We did get some warning from chips, and that weighed on things a lot. We see what happens when the Mag 7 or the chips don't do well. The Dow was up, like I said, 1.75%, S&P up about 2/3%, and the Nasdaq was up less than 1/4%. Wednesday, we saw a lower open. As I mentioned, the chips were not working. Take the earnings reports and the forward guidance and sprinkle in the fear of export controls and tariffs, which I have to say is very logical of this market. Not normal, but logical. If you think Trump is going to win, let's at least price in some of the other Trump trades. The Dow was not affected. It seems as though we're still seeing rotation from tech to cyclicals, better represented in the Dow, of course. The eco data and the Fed heads brought a bid to stocks, but for a bit, but markets could not hold that. We have seen this rotation for a few main reasons and one small reason. The two main reasons we're seeing that is that we know that small caps and cyclicals are better situated to benefit from the lower rates that are expected. And in turn, they are more sensitive to economic growth. And as markets seem to be pricing in a soft landing, the beneficiaries of that are the stocks that are green. The minor reason is that techs have been quietly or not so quietly been using forward guidance to let people know that the Goldilocks in tech and Mag 7 will not last forever, and certainly not without headwinds. In fact, many of the headwinds for tech are the tailwinds for the rest. Add in the less than reliable gauge of people being overweight technology. Short term, it rarely matters. Long term, and certainly when things look bad, people may go to lock in those gains. The Dow was up 0.5%, but in line with all the news I just went through. The S&P was down 1.33%, and the Nasdaq had its worst day since 2022 and closed 2.75% lower. For those watching their techs grow to the sky this year, or seemingly do so, the high flyer for the year, yes, Nvidia too, they were down over 6% on the day. And oh, by the way, markets and chips were a bit unnerved by Trump's comments about not standing by Taiwan if China tries some funny business. And, of course, something new, Biden tested positive for COVID. Stocks were higher on the open on Thursday as Taiwan Semi had good earnings and solid guidance. The markets had seemed to have amnesia that Taiwan Semi actually happens to be in Taiwan. Remember yesterday's news. Regardless, it helped to fuel a bounce in tech. Markets also got some surprising and conflicting eco data before the open, so even the tech bounce could not hold. We've always said in the past few years or more, that markets need technology to lead, and lead they are not doing right now. When tech rolled over, markets could not hold up. By the end of the day, not even the Dow held in the green. Dow was down 1.25%, S&P down 0.75%, and the Nasdaq was down 0.75%. Even the small cap Russell 2000 was down. Oh, and to keep running tab, Nvidia was actually up 3% on the day. And we started Friday in the dark, so to speak. Although markets opened as planned, it seemed that due to an error in a product update from CrowdStrike, a major IT outage was happening. Yes, planes grounded, credit card systems not able to work, many computer systems slow or not working at all. Even the gym signups had to go old school from the reports I received. CrowdStrike, the presumed culprit, was down, as was Microsoft, the cloud that seemed to hold up the worst, also slightly down. This is not a major long-term stock mover. Remember, we are always looking for some sort of dislocation in the markets, especially on events that make big headlines, but will not matter in the longer term. Stocks opened little change by the middle of the morning. Just to keep in the spotlight, since so many people have come to think of it runs the market, Nvidia was lower, at that point down almost 14% lower on the week. By the end of the day, the Dow was down about 1%, S&P down 0.75%, the Nasdaq down a bit over 0.75%. For the week, the Dow was the only one in the green, up about 0.75%. The S&P was down 2%, the worst week since April, and the Nasdaq was down 3.75%. Let's put last week behind us, and since there is so little up in the air right now, let's look ahead into this week ahead. It will be about the usual, earnings and inflation numbers. This time, the very important PCE comes out Friday. We'll get Tesla, Alphabet, and Visa, along with so many more, including a lot of major pharmaceutical companies. First, we'll see how things react to the news that Biden will vacate the top of the Democrats' ticket and endorse his vice president. This is not really new news, though it was expected. When it happens, we'll see if there's any reaction. PCE will come on Friday, as I said, and we'll get a look at GDP as well. On the other eco data part, which I do think will, if not already does matter more, we'll get PMIs for manufacturing and services to see if growth is holding up. Few Fed heads, must be a summer lull. Bowman and Logan, not sure how they can actually speak because it's the beginning of the blackout period for them, but I guess their speeches on Wednesdays have been approved. We'll add in labor numbers and University of Michigan sentiment and inflation expectations, and maybe, just maybe, this will be all that we get. Like I said in the beginning, we're living in historic times. We really do have to wonder what else could really happen. Not going to play that game in these videos, but we do have to make a note. And again, dislocations in the markets can, just maybe, provide opportunities. Okay, that's a full report, a lot going on in markets and in the country, and I didn't even touch on what's going on in the world. So we'll keep an eye on things, keep our head about us, take advantage of opportunities when appropriate, and keeping your goals in the forefront. Please stay in touch and have a great week.